Hi everyone, welcome back to Saheb Academy. Today in the 7th video of labor costing chapter, we are going to understand the new topic of this chapter that is called as idle time. Broadly, we have two types of idle time in this chapter, normal idle time and abnormal idle time. Okay, both the things we are going to completely understand properly. How are they cost and what is their treatment in cost accounting? And then along with this, there is also one more important concept which is directly connected with this, and that is effective rate per hour. It is also known as effective hourly rate or effective cost per hour. Okay, so that also we are going to completely understand in very much detail, and then we'll solve a problem from the ICAI study material. Okay, and also a conceptual example also to understand everything properly. Fine, so let's just begin this video. Let's understand. Now see here how simple the concept of idle time is. I'm sure you must have heard about this word and you must know the meaning of this. It's really simple. Let's just recall what used to happen in your mathematics class. Yeah, your teacher used to give all of you guys exercises to solve in the class itself, and there would be some student, let's just say you only, would just sit around and do nothing till when the teacher goes herself on the board and solve the questions, right? So at that time your teacher must have said that, why are you sitting idle? Why are you not trying to solve by yourself? At least just try, isn't it? So that's what it means, right? Sitting idle means just sitting around and doing nothing. No work is happening. Okay. Now here in cost accounting, right now in labor costing chapter, here we have factory and here we have workers. So idle time is what? The time during which no work is happening. So here it would be what? The time during which no production is happening because the workers are idle. Is that clear? That's what idle time is. And the most important part is that the workers are getting paid even though they are idle. Is that clear? But are paid. Do you understand this? Okay. They are idle and they are getting paid. Now, why is that so? Let's just take an example to understand this. Let's just say, for example, there is a factory. Daily time is 8 hours. Okay. The workers will come in the factory. They will remain there for 8 hours. And let's just say they are getting paid on time rate system, 100 rupees for 1 hour. Okay. So 8 into 100, that's 800 rupees they are getting paid per day. Is that clear? Yes. So now out of this 8 hours, just think, are they working for the entire day, all the 8 hours completely? Are they productive for 8 hours completely? Is that possible? It's not possible. You have to understand this. It's not possible. Why is it not possible? Because understand, they are humans, right? So when they will come in the factory, they will have to walk from the gate to the plant, right? There will be a distance, 5 minutes, 10 minutes, let's just say. Okay. And then let's just say they need break of 40 minutes. Yeah. Lunch break. Yeah. Isn't it? They're humans. They have to eat. They have to refresh themselves. Isn't it? So that's why, what do you say? 40 minutes lunch break is there, and 10 minutes, as I said, walking time from gate to plant. And then let's just say 10 minutes they require to set up the machinery. So in that setting up of the machinery, is any production happening? No, no production is happening. They are just setting up the machinery. Yeah. So in total, if you see 10 minutes plus 40 minutes plus 10 minutes, that's 60 minutes. 1 hour is wasted, isn't it? Normally it is wasted, na? Yeah, there is no production happening in that 1 hour. No production, nothing is happening. No benefit to the company. But company is paying 800 rupees per day, 100 rupees per hour, isn't it? So for that 1 hour also workers got paid. You have to understand this. The time during which no production is carried out because the worker remains idle and worker is getting paid. Is it clear? So do you understand the concept now of idle time? It is the difference between the time paid and the time booked. Now understand this from the same example only. See, they got paid for 8 hours. Isn't it? 8 into 100. 800 rupees they got paid. So they got paid for 8 hours, the entire day. But what is the actual work did they do? They worked only for 7 hours. Isn't it? 1 hour was idle time, right? Isn't it? Setup time 10 minutes, and then walking time 10 minutes, and then lunch break was 40 minutes. So 1 hour was wasted. So minus 7. 7 is the hours booked. 7 hours are the booked hours, the work that they have done. Is it clear? So 1 hour is the idle time. Is it clear? The difference between the hours they have been paid for and then the hours booked. If you take the difference, that would be idle time. Is that clear? Yes. Now idle time can be normal and abnormal. Okay, broadly they are classified into two categories. So now let's just understand what is this normal idle time. Normal idle time is really simple and straightforward. See, it is the idle time which cannot be avoided or reduced in the normal course of business. It is caused due to normal reasons, such as, for example, see here, your workers are humans, right? So they would need a lunch break to replenish their energy, right? They have to eat, isn't it? They are not robots, yeah? And then there will be some time required to set up the machine for production, 10 minutes, 5 minutes, whatever it is. And then there will be break between jobs, 5 minutes, 3 minutes, break between the jobs. And then walking time from gate to plant. Yeah, they are humans, they have to walk, right? So 5 minutes there also can be wasted. And then normal rest time so that they can be refreshed for the next job, isn't it? So because of all these normal reasons, whenever there will be idle time, when workers will not be doing any production, that time will be called as normal idle time. The idle time which cannot be avoided or reduced in the normal course of business. Is that clear? Yes. Now, you all know whether there is idle time or they are doing production, you have to pay them. As I said, now 800 rupees example, they have come for 8 hours, you are paying them 100 rupees per hour, 800 you have to definitely pay. Is it clear? Right. Now, because of this, see what will happen is we have to pay them. Yeah, they are getting money and we have to pay them. We have to incur the labor cost. Now this labor cost, we have to charge this, we have to allocate this to different jobs that the workers do, right? So whenever the workers will do jobs, at that time you have to understand this, that the cost that we have incurred because of normal idle time has to be charged to the jobs properly. Okay, it has to be treated as a cost of production. You have to allocate the normal idle time labor cost also to the jobs and recover that money from that cost from the customers, your customers. Is that clear? So this normal idle time is treated as a cost of production. Now how it happens, I will teach you. There is a concept of effective rate per hour that we use for this. Okay, so we'll see. So now just read this once. Okay, this will practically see, don't worry. Okay, thus in the case of direct workers, an allowance for normal idle time is considered while setting standard hours or standard rate. Okay, so when we set the labor rate, we consider the normal idle, there will be labor, normal idle time, and we have to set the rate like that. Okay, little bit higher. Is that clear? And the standard hours also, when we set the standard hour time allowed for the workers, at that time we consider there will be normal idle time. Is that clear? And then in case of indirect workers, normal idle time is considered for the computation of overhead rate. Is that clear? Yes. So now, how normal idle time is treated as a cost of production? That is the biggest question right now. Yeah, we understood, it is underlined in the red ink over here, but how it will be treated as a cost of production, we did not understand, sir. Please elaborate, please explain. So for that you have to understand the concept of effective rate per hour, or it is also known as effective cost per hour or effective hourly rate. Okay, 3-4 names are there, it's the same thing. Just rate per hour also, if you see, that's effective rate per hour. Okay, so first understand the formula of effective rate per hour. Then I will tell you what's the meaning and what's the significance of this. Total labor cost, okay, whatever cost you have incurred for your workers, that you have to take. Okay, it will include what? Basic, DA, contribution to provident fund, okay, any bonus you have given, okay, any other allowance you have given, all this you have to add. That's called total labor cost. Fine. And then you have to divide it by effective hours. What are effective hours? In simple words, effective hours means productive hours. Okay, productive hours. I told you, your workers have come in the factory, they are in the factory for 8 hours, and then for 1 hour, they need lunch break. Yeah, in that 1 hour lunch break, walking time, setup time of machinery, so 1 hour is wasted and that is called as normal idle time, isn't it? Normal idle time. So what you do is you take the 8 hours total hours minus normal idle time, you get the productive hours. For 7 hours they were productive, they were doing the job, isn't it? Yes. So 7 hours are what? Effective hours. So you are taking the total labor cost and dividing it by 7 productive hours, you will get effective rate per hour. Is that clear? So now what happened in this calculation, you have to understand this logically. What happened? See, labor cost which was supposed to be divided by what? By the total hours, it was divided by effective hours, only productive hours. So that means the total labor cost has been divided among the productive hours. So effective rate per hour also include normal idle time. Effective rate per hour, it is increased. Yeah, I will show you an example and you will understand this better. Okay, let me just show you an example. I have a conceptual example for this. Okay, see here, conceptual example of effective hours. Fine. Employee's point of view. Okay, new example. Okay, forget about that 800 example and all. Time rate is 70 per hour. Daily time the worker has to be in the factory is 8 hours. Fine. The payment he is getting is 560. 8 sevens are 56, right? 560 rupees. Is that clear? I multiplied this 560 payment he is getting. From the employee's point of view, he is earning 560 a day. Okay, fine. Now let's just see from the company's point of view, employer's point of view, what's happening. Labor cost. How much cost has been incurred on the worker is rupees 560, this thing. Okay, from another perspective, normal idle time, as I said, lunch break, let's just say 40 minutes, 10 minutes setup time of machinery, 10 minutes then walking time from gate to plant. Okay, 1 hour has been wasted. Is it clear? Let me just write over here, 1 hour has been wasted, and that's called normal idle time. You cannot avoid this. This will definitely happen in the normal course of business. Okay, so then you have to calculate effective hours. How do you calculate effective hours? As I said, effective hours means productive hours, right? So productive hours calculation is really simple. Total hours minus idle time, just normal idle time. Okay, 8 minus 1, so that's 7 hours. Clear? Simple. Now after this we have to calculate effective rate per hour. Okay, effective rate per hour. What is the meaning of this? The meaning is rate for costing purpose. Okay, fine, this is the time rate that you are paying the employee, but from the company's point of view, to do the cost accounting, to properly allocate the labor cost to the particular jobs and recover the cost from the customers of those jobs, right? What we have to do, we have to calculate a proper effective rate. Okay, which consider the idle time. Yeah, which consider the idle time and treat that as part of cost of production. Okay, to do that we need this. What do we need? We need this calculation, we need this effective rate per hour. So that's what we do. We take the labor cost 560 and divide it by effective hours, only the productive hours. When we do that, what happens is this 560 has been divided in this only 7 hours. Yeah, these 7 hours are absorbing that cost. So because of that, our rate will be higher. It will be 80 rupees per hour. Yeah, here it was 70, now it's 80 rupees per hour. Why is that so? Because we have reduced the hours they have worked. Okay, is it clear? So when we do this, we treat the normal idle time as cost of production. Yeah, the rate has been increased. Do you see this? Yes. So now we can't do this. Okay, 560 divided by 8, we can't do this. 560 divided by 8, 70, we can't do this. That's fine from the employee's point of view, he's getting that money, that's fine. But from our point of view, from the company's point of view, this rate we will use while we'll do the cost accounting. You have to understand that. Okay, so what does that mean? Organization has to incur rupees 80. Yeah, organization has to incur rupees 80 labor cost to make the worker work for 1 hour productively. Not entire day I'm talking about, just the productive work. Is that clear? That's the significance of this effective rate per hour, and we use it for cost accounting. Okay, for allocation of labor cost. So now see, let's just say this employee has worked for 7 hours. How many hours? 7 hours. 1 hour is wasted, na? 1 hour is normal idle time. Out of 8, only 7 hours he have worked. 7 hours have been booked in his card, in his labor card, time card. It has been booked for 7 hours. On job A 5 hours, on job B 2 hours, right? So what will you do? You will take 5 into 80, 2 into 80. That's what you will do. 5 into 80, 400. 5 is a 40, 0, 400. 2 into 8, that's 16, 0, 160 rupees. So if you add up now these two figures, what do you get? 400 plus 160, it's equal to 560 rupees. Isn't it? Employee got 560. He thought from his own mind that he got 70 per hour, and he has worked for 8 hours in a day. Entire day he was there in the factory, he has worked for 8 hours. But from the company's point of view, from cost accounting point of view, from the accounting point of view, what happened? He has productively worked only for 7 hours. Our rate was 80 per hour. Is that clear? And then when we did the allocation, we found out he has worked 5 hours over here, 2 hours over here. 400 and 160, that was equal to 560. What about the remaining 1 hour? 1 hour was wasted. It was normal waste. It was normal idle time, normal waste time. So because of that, what did we do? That 1 hour cost also is included in this only. That 1 hour cost also, when he was having lunch, when he was walking, setting up the machinery, that 80 rupees which we have incurred over there, that also has been transferred in this only, here only. Is that clear? I mean, that 70 rupees also has been included here only, not 80. 70 is included here only. Is that clear? Do you understand this? Let's just say, for example, we don't have effective hours concept and all. Then what would happen? If we just do this 560 divided by 8 and 70, what is our problem? Why can't we just follow this? This is your question, isn't it? You are thinking about this. So let's just say we did this calculation. Okay, how are we going to allocate the labor cost to the jobs? You have to understand how will you allocate. See, this will not change. Job A, he has worked for 5 hours only, job B 2 hours only, and 1 hour wasted. This thing is same only. But you are doing this calculation, let's just say this wrong calculation, then what would happen? See, you would have to do like this: 5 hours into 70, isn't it? 350 you would have to do, isn't it? See, let me just show you. On job A, 5 into 70, that's equal to 350. And then on job B, what would happen is, sorry, it's 2, right? 2 into 70, 2 7s are 14, right? So 140. So if you add up these two, what will happen? 3 plus 1, that's 400. This will be and then 90, 490. You see, 490. It's becoming 490. You see, you paid 560 and you're doing the allocation of 490. You're recovering from job A only 350 cost, and from job B customer you're recovering 140 cost. So in total you have made recovery of how much? 490. Is that correct? Is that correct? See here, you have paid for your to your worker 560 and you're making recovery. Do you understand what is recovery? See, this 350 and 140 now, it will be added to the labor cost of these jobs, right? And then recovered from the customer. They will charge the selling price and they will recover the money from the customer. So see, there is a difference. See, 70 difference is there. From whom you will recover this 70 rupees? So if you follow this, method, then what is happening is normal idle time is not treated as a cost of production. It is not treated as a cost of production. When we do this 560 divided by 7, 80 per hour when we got, what happened? When we did that, see, we recovered properly entirely from the job A and job B customer. Here we recovered 400, here we recovered 160, and that was correct. In total we recovered 560. But if we follow this wrong way, then 70 is still pending to be recovered. Still pending, so it's wrong. This is the normal idle time cost. 1 hour which was wasted, that was the cost of that 1 hour was 70 rupees. So 70 rupees is not recovered, it's still pending. So that's why this is wrong. We can't do this. This is our problem. We can't do this. So we have to follow this. Is it clear? Do you understand this? I have explained this with complete logic right now. Okay. Previously also I explained you effective rate per hour, but that was just for a specific problem, and I explained there in a very short time. Okay, so do you understand this now, the entire concept? Right. Now we have to understand abnormal idle time. So let's just do that. Okay, let's just understand abnormal idle time. Now see here, abnormal idle time is really simple. The idle time which is not normal, okay, which is not classified as normal, is called as abnormal idle time. Simple and straightforward. Okay, abnormal idle time should be further analyzed, further should be classified into controllable abnormal idle time and uncontrollable, abnormal idle time. Is that clear? Controllable means, management is responsible for it and management can reduce it. Is that clear? Controllable abnormal idle time refers to that time which could have been put to productive use had the management been more alert and efficient. Because of poor management, this abnormal idle time has been caused. Okay, so it is controllable. So management has to identify and analyze and work on that and control it. Is it clear? That's the thing. And then uncontrollable abnormal idle time refers to the time lost due to abnormal causes over which management does not have any control. For example, there was an earthquake and because of that production didn't take place. Yeah, factory was closed or something like that happened. Yeah, flood, machine breakdown, suddenly machine breakdown. Even though we were doing proper maintenance and everything, still the machine breakdown due to some accident. Yeah, or there was a power failure, something like that. In that case, it's uncontrollable. Fine. But it doesn't matter whether it's controllable or uncontrollable. The treatment of abnormal idle time is same only. And there are lots of examples of abnormal idle time: lack of coordination, power failure, machine breakdown, any other accident, non-availability of raw materials, strikes of workers, lockouts, fire, flood, poor supervision. Now poor supervision and lack of coordination and all is what controllable, isn't it? And then earthquake. Yeah, so all these are the examples of abnormal idle time. Is that clear? Now what's the treatment? Understand, huh? Controllable or uncontrollable, treatment is same. In a cost accounting, treatment is same. What is the treatment, sir? See, treatment is really simple. It is not part of cost of production. Exactly opposite to normal idle time. You cannot treat it as part of production, part of cost of production. No, you have to separately take it to costing profit and loss. What is the meaning? It is not part of cost of production. It means you cannot recover the money which costed us, right? The money which cost us for abnormal idle time, you cannot recover that from the customer. You cannot recover that. You have to separately treat it as loss in costing profit and loss. You have to debit it. In costing profit and loss, you have to take it on the debit side. That's what you have to do with the abnormal idle time. Now, for this also we have a conceptual example. The same example, this example only, just I have little bit modified it. See here. Let's say, see here. Yeah. Let's say in the same example, there is a power failure of 1 hour while working on job A. Yeah. Job A, 5 hours was there, right? So here while working job A, let's just say there was a power failure, and because of that, instead of working for 5 hours, he has to work only for 4 hours. Yeah, that's the modification. So because of this, and this is what power failure is, what do you say? Abnormal. Okay, it's not normal, it doesn't happen normally, it's abnormal. So what do we do with abnormal idle time? Let's just see here in this conceptual example. See, labor cost is 560, the same example, nothing has been changed, this only. Okay, labor cost is 560, normal idle time also same only, 1 hour. Yeah, 40 minutes lunch break, 10 minutes setup time, 10 minutes walking. Yeah, normal idle time is 1 hour. Abnormal idle time just now in this example is 1 hour. Power failure. Okay, yes. And then effective hours, how will you calculate? The same way you will calculate. Understand the formula: total hours minus normal idle time hours. You will not deduct the abnormal hours. Is it clear? Just the normal. So 8 minus 1, 8 minus 1, so that's equal to 7 hours. It's still 7 hours only. You understand that? Still 7 hours. And then rate for costing purpose, or effective hourly rate we call it, effective cost per hour or effective hour rate. Yeah, so 560, yeah, labor cost divided by effective hours, total labor cost divided by effective hours. Yeah, both are per day figures. You divided that, you got 80 rupees per hour. There was no change at all. You see this 80 rupees per hour previously also when there was just normal idle time, and now when you have abnormal idle time also, still it's 80 per hour. There will not be any difference. Is it clear? Did you understand this? Yes, we understood that. Now let's come to the main part where there will be a difference. Okay, abnormal idle time will not be deducted while calculating effective hours, that you already know. Now the main part is allocation of wages, this part. Yeah. Now employee has worked for how many hours now? Tell me. Has he worked for 7 hours? No, entire hours were 8. Yeah, 1 hour was normal idle time, so 7 productive hours should have been there. Yeah, but because of abnormal idle time, 1 hour was wasted because of abnormal reason, and only 6 hours were booked. 6 hours employee has, the worker has worked, right? So see, 7 hours productive hours should have been there. Yeah, effective hours are 7 only. So job A 4 hours. As I said, power failure happened on job A. So on job A he has worked for 4 hours. On job B 2 hours. The same. And abnormal idle time 1 hour, right? So now 4 into 80, that's 320. 2 into 80, that's 160. Is it clear? 4 into 80, 320. So from job A's customer, from our customer of job A, we will recover 320 from him. And from the customer of job B, we will recover 160 from him. Is that clear? Okay. And then abnormal idle time 1 hour, 80 is there. Okay. So this 80 will go where? This 80 will go to costing profit and loss. Yeah. See here. It is not part of cost of production. You cannot recover it from the customer. You have to take it separately as a loss on the debit side of costing profit and loss. It will be debited to costing profit and loss. Is it clear? Simple and straightforward. So see here, 320 plus 160 plus 80, that's equal to 560. Now you have to understand, 560 is not recovered. 560 has been paid to worker. Worker has got 560 and he has went home. But on that day, from the accounting perspective, what has happened? From the accounting perspective, understand, in the job A, we have added a labor cost of 320. In the job B, we have added a labor cost of 160. So this has been recovered from the customer of job A and B. And then this 80 has not been, recovered from any customer of any job. No, because it's abnormal idle time. We cannot treat it as cost of production. What will we do? We will take this as simple loss to costing profit and loss on the debit side. Is it clear? 80 rupees will go to costing profit and loss. Do you understand? This is the difference. Here what happened? Here entire 560 was recovered. Okay, there was no abnormal and all. Entire 560 was recovered. 400 from job A customer, from job B customer 160. Here it's not like that. Here only 320 and 160 was recovered. Remaining 80 went to costing profit and loss. Is it clear? The entire logic, everything has been, taught to you in this video. So I hope you have understood this crystal clearly. Okay, fine. So that's all for this video. Okay. No, we have to solve one problem, right? So let's just solve one problem and then, we'll finish the video. Okay. One problem we have to solve. Illustration 1 from the ICAI study material. Let's go to that question. Now see here, we have the problem 1 of idle time. Okay, we have solved many problems in the previous videos of labor costing chapter, but that were of different topics. Okay, in that order we are following over here in this chapter. So now this is the first problem of idle time, and this question is from the ICAI study material, illustration 1. Now in this question we have normal idle time and we have to calculate effective hourly rate. Okay, let's begin. See here, X, an employee of ABC company, gets the following emoluments and benefits. Fine. So first understand, okay, they have asked us to calculate what? See the requirement first. You are required to compute the effective hourly cost of employee X. We need to calculate what? We need to calculate this effective rate per hour. So what do you need? You need total labor cost and effective hours. These are the two things you need. Is it clear? So just understand the question now. See here, basic pay 10,000 per month, dearness allowance 2,000 per month, bonus 20% of salary and DA. It's really simple. Just add these two and take 20%. You will get the bonus. Other allowances 2,500 per month, and then employer's contribution to provident fund, that's 10% of salary and DA. Again, salary plus DA, take 10% of that, you will get employer's contribution to PF. Fine. So all this entire thing is what? Labor cost. Okay, and here it's per month figures are given, so you have to convert it per annum. Yes, see here, X works for 2400 hours per annum. You see, they have given you hours per annum, so you have to convert all this into per annum figures. Okay, yearly figures, out of which 400 hours are non-productive and treated as normal idle time. So this is really simple and straightforward. See here, they have given you the total hours in a year, 2400 hours, and they are saying 400 hours non-productive. Non-productive means, you know, and they are saying it's normal idle time, so it's normal idle time. Is it clear? So how many are the effective hours? 2400 minus 400. Simple and straightforward. You are required to compute effective hourly cost of the employee X. So let's just see how to solve this. It's really simple. See here, first calculate effective hours. You all know effective hours are what? Productive hours. Total hours minus normal idle time. Just normal idle time we subtract. 2400 minus 400, that's equal to 2000 hours. Is it clear? Simple and straightforward. Okay, fine. Now after this, you need to calculate labor cost. How will you calculate labor cost? Just calculate this whole part and add it up. You will get the labor cost. Okay, and just divide the sum by this 2000 hours. You will get, you know, effective hourly cost of employee X, right? So see here, we make a small statement for this because, you know, the list is there over here. Statement showing effective hourly rate calculation of employee X, right? So see, particulars, amount in the year figures, right? Yearly figures are there. So first we have basic pay. It's 10,000 per month. 10,000 into 12, that's 1,20,000. Simple and straightforward. And then we have dearness allowance. Now this allowance is given because of inflation. You will learn more about it in the taxation subject. Okay, in income tax. Now see here, 2,000 per month. So 2,000 into 12, that's equal to how much? That's equal to 24,000, isn't it? That's dearness allowance. Is it clear? Okay. And then after this, we have bonus. How will you calculate bonus? They have told us 20% of salary and DA. So just take the salary, basic pay 120 plus 24, that's equal to how much? 1,44,000. Yep. 1,20,000 plus 24, that's equal to 1,44,000. Of this, 20% is the bonus, so that's equal to 28.8, which means 28,800. Yeah, 28,800. Is that clear? Yes. After this, we have other allowances, 2,500 per month. So 2,500 into 12, that's equal to 30,000. Okay, that's equal to 30,000. That's other allowances. And then we have employer's contribution to PF. Now understand, in some question they will give you employer's contribution as well as employee's contribution. So now you have to be very careful. You just have to take employer's contribution. Is that clear? Why is that so? Why is that so? Because we just need labor cost in the numerator. In that formula, we just need labor cost. Okay. So labor cost means what? Whatever is the cost for the organization, for the company, for ABC company. You have to think from the ABC company's point of view. Okay. So who is employer? Employer is ABC company. So we can take that. Okay. 10% of salary and DA. So salary and DA we saw it's 1,44,000. Isn't it? 120 plus 24. That's 1,44,000 into 10%. That will be equal to 14,400. Is it clear? Simple and straightforward. So we got that. The summary was that we just have to take employer's contribution, not employee. Employee is ignored. Yeah. And then after this, everything is over. So just make a sum of this. Yeah. 1,20,000, 24,000 plus 28,800 plus 30,000 plus 14,400. That's equal to 2,17,200. Now this is the total labor cost of employee X. Now what we have to do, we have to divide it by effective hours, isn't it? That's what we do now. Total labor cost we got divided by effective hours. So divide by 2000. That's equal to 108.6, right? 108.6 is our effective hourly rate. So this is the rate we'll be using for costing purpose while doing the allocation of wages and everything. Okay, this is the effective hourly rate. That was the requirement of this question. Yeah, you are required to compute the effective hourly rate, effective hourly cost rate, the same thing of employee X, and we have did that. So that's all for this video. Yeah, see you in the next video. Bye.